Dan Ives, the Managing Director of Equity Research at Wedbush Securities, joins us now. Dan, thanks for being with us. Always good to see you. So you say that this is a gut punch for investors, but as we just outlined, it's been a rough few months already. Why is this the gut punch?
Look, it's really been a nightmare on Elm Street a few months for any bull in nickel. And I think right now it continues to be more shoes to drop. And when you look at this Republic deal, that was a feather in the cap for the bulls, because that was a large, waste deal. It was something that was really potentially going to lead to other deals down the road. The fact that that got canceled, soon after being signed, I think it just creates those major headwinds that nickel is going through. And, right now we don't see those abating. And I think from a credibility perspective here, even though EV is a hot market, it continues to be an Everest-like climb in terms of gaining credibility. Today was another step backwards.
Well, Dan, speaking of those bulls, so there was a note yesterday from Cowen. It's the street high price target of $47, essentially making the exact opposite argument that the deal falling through was actually a positive for the company, that it sharpens the focus and that the collaboration agreement would have been expensive. What do you say to that?
Look, I mean, obviously some rose-colored glasses in terms of for any bull looking through it. I think, just to put it bluntly, there's no way to spin this positively. I mean, this was something, when they announced it, it was really viewed as a potential paradigm changer. And here it is with more analysis from a cost as well as technology perspective, it gets canceled. And I think it just speaks to the broader issues going forward in terms of what Nikola is trying to build on hydrogen. And of course, on the trucking side, there's already challenges there. But if you look at the GM partnership and much more slimmed down and no ownership, combined with this, it's hard to look an investor in the eye and be bullish here relative to what we're seeing. And I think today was just another straw that brought the camel's back for anyone that tries to be bullish going into next year, despite massive tailwinds in the EV market.
So what does the company have to do to regain credibility? You say that the company still has a Kilimanjaro-like uphill climb to gain back street credibility heading into 2021. So where do they start?
I think that they first start on prototypes, ultimately hitting the road, starting to build models both in the U.S. and Arizona, and broadening out that facility as well as in Europe and Germany. And then it's more partnerships. I think it's giving investors, some comfort that they could build a hydrogen, we'll call it deployments around the world. And that's really very similar to the supercharger network for Tesla. And then you got to get more customers signed on going into 2023. That would be the shots of credibility to show it's not just a vision, it's reality. But so far, what we've seen, it continues to be, an overpromise, underdeliver. And in this market, as you've seen, that has been a massive disappointment, even for the bulls that continue to spin things positively.
Yeah, and you do sort of hear rumblings, right, comparing Nikola to Tesla. Yet an important distinction is that Nikola is still pre-revenue, unlike Tesla, even in perhaps some of its darkest days. So what do you say to the bulls out there who insist that, maybe this is a struggle at the moment, but there are other examples of companies who have gotten out of these sort of rough periods and done very well?
Yeah, no doubt. And I think right now, but it also comes down to there's only one Tesla and one Elon Musk. And of course, there's other technology companies, Fisker, you look what's happened in China with NIO and others, they're going to go through some hurdles, and they've gone through it successfully. But if we look what Nikola is trying to do right here, it's a huge vision. They might have to scale that down. There still could be some promise going to the next year or two. But for us, I continue to think more bad news, first ahead of good news. And that's why we continue to have a sell rating here, more cautious, and EV, Tesla, and some others continue to be our play rather than a Nikola.
Okay, well, Dan Ives, we'll leave it there. We do want to point out that Tesla actually positive right now, up about 0.5%, but still down 7% in its first week in the S&P.
Shepard Smith here. Thanks for watching CNBC on YouTube.